An MD with a 17,000 rupees salary and a gold empire worth crores, ED's tightening noose on Rajesh Exports. It was night time and the lights in some offices in Bengaluru and Mumbai were still on. Outside everything looked normal, but inside the world of files, computers and stock records had suddenly come under the scanner of investigation. A company whose name was once associated with the shine of gold export and the jewelry business was now standing in the sharp light of questions. The question was not just about business, it was about trust. The maximum stir was caused by that detail, in which the ED said that the monthly salary of the MD of a company reporting a consolidated revenue of around 7.7 lakh rupees crore was about 17,000 rupees. And the story did not stop here. According to the ED, the company's CFO did not receive a salary after 2020. In such a big company, this matter was like a shock for investors. Right from here, the fear begins. If such big questions are raised on the numbers, stock and foreign transactions of a listed company, who should small investors trust? This story is not about any final judgment. This is a story of an investigation right now, where the ED and SEBI have leveled serious allegations, and the company has called some allegations incorrect. Rajesh Exports has long been counted among India's large jewelry and gold export companies. Its name was not small in the gold business, which is why the matter became even more sensitive. The gold business is not like ordinary trade. Here the record of every shipment, every invoice, every gram and every foreign payment is extremely important. Even a small mismatch can become a big question. Starting the 23rd of June 2026, the ED launched search and seizure operations at 9 premises linked to the company and connected persons in Bengaluru and Mumbai. The action was taken under FEMA. FEMA, meaning the Foreign Exchange Management Act 1999, is the law associated with cases where foreign exchange overseas investment, import-export and cross-border transactions are investigated. In the ED's press release, the first big issue was the non-availability of records of foreign transactions. According to the agency, the company could not produce necessary documents. These documents were stated to include records linked to the settlement of imports, exports, overseas investments, foreign trade receivables and payables. These exact records verify the genuineness of a transaction. When documents are not clear in foreign trade, it becomes difficult for the investigation agency to understand whether money actually came and went in exchange for goods, or if they were just paper entries. The biggest example was stated to be a claimed 1,035 crore rupees investment in African mines. The ED said that contemporaneous records and documentation were neither found in the search nor provided by the company. This figure is important because a mining investment is no small accounting entry. It contains several layers like approvals, agreements, payment trails, and ownership records. The second big question was raised on the set-off of foreign trade receivables and payables of around 3,000 crore rupees. According to the ED, this set-off was linked with suspicious foreign parties. Set-off simply means adjusting the receivable and payable against each other instead of sending money through the actual route. This can be legal too, but the documentation needs to be extremely clear. If the documentation is not clear, a set-off can blur the real cash movement. This is the exact reason why the ED is now investigating the actual nature of these transactions. The ED also mentioned suspicious foreign parties present in the UAE and other overseas jurisdictions. This detail makes the question of transparency in cross-border trade even bigger. The third blow was a stock discrepancy. The ED said that in physical verification, a difference of around 40% was found between the stock recorded in factory registers and the actual physical stock. In the gold and jewelry business, stock itself is the body of the business. If a big gap is seen between records and reality, investor confidence can shake immediately. Here too, the final conclusion will come only after the investigation. But a thing like a 40% mismatch raises a big question on the internal controls of any listed company. Now comes the salary matter, which shocked ordinary people the most. The ED called this the disproportionate remuneration of key personnel. According to the agency, the remuneration of the senior management was unusually low compared to the scale of the company. The CFO had no salary since 2020, and the MD was stated to have a salary of around 17,000 rupees per month. This matter in itself does not prove a crime because promoters many times keep salaries low. But in such large reported operations, this certainly looks unusual. In corporate governance, salary is not just money. It also gives a signal of management structure, responsibility, accountability, and professional functioning. If a critical role like the CFO is not receiving a salary at all, investors will naturally ask how the finance function was running and in whose hands the real decision-making lay. In this exact matter, SEBI's entry had already happened. On the 3rd of June 2026, SEBI had issued an interim order against Rajesh Exports and Rajesh Mehta. SEBI leveled a prima facie allegation that, between 2021 and 2025, the company made a misrepresentation of around 15.15 lakh rupees crore in consolidated revenues. According to SEBI, a large part of the company's consolidated revenue was shown to be linked to overseas subsidiaries, especially Switzerland-based 𝐮𝐴 SA. But the regulator raised a question that the financials of the subsidiaries were not systematically disclosed in the public domain, and 𝐮𝐿𝐶𝐴's standalone audited statements showed a different picture. SEBI also said that there are serious gaps regarding revenue recognition and supporting records. This allegation points toward the core problem of accounting transparency. A denial also came from the company side. Rajesh Mehta told Reuters that the disclosures were correct, and SEBI did not properly consider the consolidated revenue. He also cited the refining scale of 𝐮𝐿𝐶𝐴 and said that a large revenue was naturally possible. Therefore, it is important to keep it clear in the script that the matter is currently disputed. But the market does not like uncertainty. When there is such a big difference between the regulators and the company's version, fear comes first to an investor's mind. An investor thinks, if there is a question on the revenue number, a question on the stock, and foreign records are being stated as missing, how can the balance sheet be trusted? The ED also raised the angle of suspicious block trades and share manipulation. According to the agency, the names of certain individuals had also appeared in the 𝐼CIJ leaks. 𝐼CIJ, meaning the International Consortium of Investigative Journalists, is known for global investigations linked with offshore leaks and hidden ownership structures. The ED said that a probe into possible undisclosed offshore links is underway. This means that the agency wants to understand the hidden layers of ownership and fund flow. There was also an allegation in the press release that by using NRI Benamidas, an amount of more than 600 crore rupees was siphoned out of India through share manipulation. Benamidar simply means a person in whose name an asset or transaction appears, but the real control may be with someone else. If this has happened, it will not remain just an accounting issue. Then it becomes a matter of fund movement, beneficial ownership, and market integrity. The ED spoke of seizing incriminating documents and digital evidences during the search. Now the examination of these records will form the basis of the further investigation. An important point will have to be understood here. The ED's press release states allegations and findings, but guilt is decided only after a court or final adjudication. That is why it would be hasty to consider any company or individual guilty. But the allegations are so serious that both investors and regulators cannot ignore them. In the stock market, trust is an invisible asset. The plant, office, and gold may be visible, but if trust breaks, the valuation can come down very quickly. Retail investors often invest looking at the company's brand name. But this case shows that it is necessary to look at the brand and the balance sheet through different lenses. Just because a company's revenue is very large does not mean that its cash quality, governance, and accounting quality are equally strong. Behind revenue and profit supporting documents, auditor confidence, cash flow, related party disclosures, and subsidiary transparency are equally important. If the subsidiary is overseas, the risk increases even further. Because verifying the accounts there, local laws, ownership structures, and transaction trails can be more complex. Because of an international asset like 𝐮𝐿𝐶𝐴, the story of Rajesh Exports had become global. But now that exact overseas layer has become the center of scrutiny. In this matter, SEBI also stated the need for a fresh forensic audit. A forensic audit is different from a normal audit, because in it, suspicious transactions are looked at through an investigative lens. For a normal investor, the lesson is clear. Getting into excitement just by looking at the sales figure can be dangerous. Along with sales, cash flow and auditor notes should also be read. If subsidiaries play a big role in a company's financial statements, it becomes even more necessary to understand their details. One should know which entity is doing what behind the consolidated numbers. Promoter actions are also important signals. If the regulator raises questions on promoter-linked fund flows, personal accounts, or block trades, the risk alert becomes even bigger. This case is a warning for corporate India too. Companies doing global business will have to be extra strong in documentation, internal control, and disclosure standards. In the gold business, trust is the biggest currency. The customer trusts the purity, the bank trusts the invoices, the investor trusts the accounts. If this exact trust comes under a question mark, uncertainty can spread across the entire value chain. Exporters, lenders, shareholders, and suppliers all become cautious. The matter of Rajesh Exports is still an unfolding story. The ED's investigation is ongoing, SEBI's process is ongoing, and the company is presenting its point in its defense. In the coming days, the seized digital records, foreign transaction documents, forensic audit, and company response will decide the direction of this case. If the allegations are proven, it could be included among the biggest cases in India's corporate governance history. If the company proves its side, the narrative can change. But for now, the public message is clear. In listed companies, numbers must not just be large, they must be verifiable too. Because there is no shortcut to trust in the market. An MD's 17,000 rupees salary caught people's attention, but the real story is much bigger than the salary. It is a story of records, stock, overseas money, and shareholder trust. When a company tells a revenue story of lakhs of crores, investors should look at the questions before the shine. As much as gold shines, its investigation should be just as clear. And this itself is the biggest lesson of this entire matter. Earning money is difficult, but investing it in the right place is even more difficult. Because every shining figure in the market is not always gold.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.